Hello again, everybody. My name is Trevor Carlson. I'm the president of Heritage Reverse Mortgage, and we are your reverse mortgage specialists. My tutorial today, or my video, is a little bit different than what I usually do. I wanted to give a walkthrough on how to read the reverse mortgage statement. For a lot of people, it's very confusing because the layout is different, the terminology is different than any other mortgage you've had in your life. And so I have a lot of clients who will call in with questions about what everything means and how they're supposed to read it. And so I wanted to put this out there in case you have confusion about your reverse mortgage statement. And so to do that, I'm going to bring up a couple of examples of statements so that I can kind of walk you through each one and show you what everything means. And so this statement is really a very common statement that most of the banks today are using. And so you see up here in the left-hand corner, this is the name of the lender. Right below that normally would appear your name and address as the homeowner. But as I mentioned, if you have a mortgage with Longbridge, AAG, Finance of America, Mutual of Omaha, Celink, most of the major banks today are using this exact same format. And so you can kind of look off of this and see, what everything is going to mean. And so that's why I'm going to spend most of my time is on this one. Right here in the middle, you've got your two boxes, and these are the nuts and bolts of your mortgage. Here on the left side, this is the principal limit information. Now, principal limit is a term that doesn't come up on regular mortgages, and so most people don't understand what it means. The easiest way for me to explain it is to reterm it as borrowing power. A principal limit is essentially your limit of the amount of money you can borrow when you do a reverse mortgage. And so the first line there, original principal limit, that's just referring to your maximum borrowing power the day you close this loan. And that figure is based off of a number of factors. It's based off of your age or the age of the youngest borrower on the home. It's based on the interest rates at that time when you did the loan. And of course, it's based on the appraised value of your home at that point in time. Now, the interesting thing about reverse mortgages is that they can grow. And so on a 30-year fixed mortgage, your mortgage can only go down, right? Your mortgage cannot go up. On a reverse mortgage, it's kind of the opposite. Your mortgage can go down or it can go up, depending on whether or not you're making payments. And so that's one of the primary differences of a reverse mortgage is that you have the option of not making payments, and so your mortgage balance will grow up. This growth of principal limit on the second line, that's what that's referring to. Is it's just saying that this was your maximum borrowing power when you started this loan. Since then, your age has increased, the estimated value of your home has increased. And so based on those factors, your principal limit or your borrowing power can have increased as well. And so this third line is your current principal limit. That's just a combination of those two together. Servicing fees set aside. None of the banks I use charge a monthly servicing fee, but I know that there are some out there that do, and this is usually about a $20 or $25 fee. If you are being charged this, it's kind of an unnecessary fee. I would call your bank, see if you can negotiate with them to get that removed, because again, there's just no reason for them to be charging that extra money. The next line here, this is your current total loan balance. And so if you were to pass away today, or if you were to sell the home today, this amount of money is what needs to be repaid to the bank, right? And so again, this is where a lot of people get confused because they see this number and they think, wait a second, I owe all of this money? That's not right. That's not how much money I borrowed. No, 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 that's not what's saying. That's not what this is saying. This is saying you could borrow this much money, but as of this point in time, this is the amount of money that you have borrowed or the interest that you have been charged on the loan. Down here, a couple of other lines. A repair set aside would be if, let's say you had to do repairs on the home before you could close the mortgage, but the bank didn't want to make you wait to close the loan. And so what they'll do is they'll say, okay, let's take $10,000 out of your line of credit. We'll just hold it in reserve over here. You get the repairs done. And then once they're done, we'll take this money and pay for those repairs. That's what the repair set aside is. Tax and insurance set aside, very similar in function. This is for taxes and insurance, and it's also called a LISA, or a life expectancy set aside. Basic idea is that the bank is taking a portion of your line of credit and just holding it in reserve and then they're going to give you a little bit of money every year to pay your taxes and insurance that are due on the property. And then let's see. I think that's really all that you need to be concerned about in this box. Going over to the right side, this is your line of credit information. If you have a fixed interest rate on your mortgage, you have no line of credit. A line of credit is always attached to an adjustable interest rate. But same basic principle here. This original line of credit reserve, this is just telling this borrower how much money they had when we closed their loan. Growth of line of credit. Again, this is kind of a function of this growth over here. The idea being that if you have money in your line of credit that you're not using, you've left it in there as a reserve, all of that money will grow by the same interest rate as your mortgage insurance rate and your actual insurance rate. And so for this client, in the couple of years they've had this loan, their line of credit has grown by about $33,000. This third line is current line of credit loan balance. This is, again, one of those confusing terms. Essentially, all this is saying is that since you started the loan, you've borrowed $24,000 out. But this figure is already being included in the current total loan balance. There's not an additional $24,000 on top of the 137. It's already being included in that total balance. And then down here at the bottom, this is your current available line of credit. This just tells this homeowner how much money they have available to draw out as of right now today. Now, the only thing that may change on this sometimes is that on line of credits, FHA does limit the first year amount of funds that are available for most of these mortgages. And so if that's the case, if your loan is less than a year old, you may have an additional line that says first year limit on line of credit, and then second year additional available line of credit or something like that. That's all it's saying, is that up until 1 year after you've closed your loan, there is a little bit of a cap on how much money you can actually draw out of your line of credit. Third box here, this is your interest rate. And I don't know why they add these first two lines, daily periodic rate, monthly periodic rate. It's really just showing you what your interest rate is broken down on a monthly or a daily period. But most of us use an annual gauge when we're looking at our interest rates. And that's what this third line is. This is your annual periodic interest rate. Your first column, this is what FHA is charging. This is the mortgage insurance premium rate for all loans after 2017 that originated after 2017. This is 0.5% or 0.5% per year. And it's based on the balance of your mortgage, right? Not your available funds, just what you've actually borrowed. For loans previous to 2017, typically this would have been 1.25%. Little side note here, if you do have a reverse mortgage that you have not refinanced yet, whether it's pre-2017 or post-2017, you need to give us a call, because interest rates are amazing. Values are just going through the roof. Now is a good time to reset or refinance your reverse mortgage. And we can often do that with little to no closing costs. And so give us a call so we can look at that for you to just better that situation. These next three columns, the index is, again, this loan is an adjustable rate mortgage. It's a line of credit. The index is what adjusts. And the index is kind of your gauge on where the market is as a whole. Now, most banks right now are using the constant maturity treasury as the index. Without getting into detail, it's just what they use to determine what today's going interest rates are. The margin is fixed always, and it's set at the time you close the loan. But this last column on the far right, this is the one that really matters to you. This is your combined, this is your total interest rate at the time of this statement. And so the loan interest rate is just combining the index and the margin to give you what your current interest rate is. As I mentioned before, if you have a fixed interest rate, these two in the middle will be zeros. There won't be anything there to calculate for you. Going to your second page, what you're going to see here on page number 2 is a breakdown of your actual charges from month to month. And so this is showing your monthly interest rate charge. For this client, it was $427. And the mortgage insurance charge that goes to FHA, that was $56. And so again, really simple. This is illustrating how much your mortgage is growing from month to month. I want to show one more example too, because this is a very common. If you have a reverse mortgage that's more than 8 or 10 years old, you may have gotten it with Wells Fargo. Back then, Wells Fargo was the major player in reverse mortgages, but for whatever reason, one day they just said, "We're done. We're not doing any more reverse mortgages. We want completely out." And when that happened, a company called Novad stepped in and began servicing all of Wells Fargo's loans. And so again, if you have an old reverse mortgage, it's a pretty good chance you have a statement that looks just like this one. Everything is essentially the same. The layout is just different. And so again, you've got Novad up here on the left. You'll have your name and address right here. You'll have details of your mortgage when it closed, your FHA case number and address, etc., right here in this box. The points that matter the most to you are going to be your interest rate. If it's a fixed rate, you won't have, again, your index and your margin. There won't be any variation there. But if it's an adjustable rate, then you'll kind of see that represented in the index and the margin. Down here, it's very similar, your original principal limit, your current principal limit, which we talked about was, your borrowing power. And then your loan balance, again, that's how much you actually owe on this mortgage if you were to pay it off today. I think, and then down here again, it just breaks down for you how much interest you're charged per month, how much mortgage insurance you're charged per month. But again, if I'm not going to I need to really push this point for your benefit. If you have a mortgage statement that is with Novad that looks like this, you need to call us. You need to refinance your mortgage because your interest rates are probably very high. Your value is probably skyrocketed since you set up this reverse mortgage. And so you would likely have a substantial amount of money that's available for you to draw out and live a little bit better. And like I say, the closing costs for refinancing these loans typically are pretty low to nothing if we can arrange it. So I hope this is helpful. I know it's kind of long. If you have more questions, please give me a call. That's what we're here for. I don't care. I don't care if we were the ones that originally closed your loan or not. I don't care if this is merely just a favor for you. We're always happy to help people. If you have questions on your reverse mortgage, we want to be there to help you to enjoy it, help you understand it, because honestly, it's one of the greatest financial planning tools you could have gotten for yourself. But I feel that many people don't realize the ability that the opportunity they have, even if they already have a reverse mortgage. There are functions to it that you may not be utilizing now that could make your life even better. And so again, thanks for your time. Look forward to hearing from you. You can visit us at heritagereversemortgage.com. You can call us at 435-359-9000. Thanks again. Have a good one.